Everyone's talking about whether it makes sense to rent or buy right now, especially with interest rates hovering at around 6.5%. So, why don't we break it down with some real numbers so we can compare these two things? In today's market, the average home price is about 450 grand. The average rent for a home like this is about $2,600 a month. Now, on the surface, renting looks cheaper, but here's the hot take. Once you factor in appreciation, principal paydown, and tax benefits, buying actually comes out ahead, and by a lot. At today's rates, a $450,000 purchase with 20% down gives you a monthly mortgage payment of about $2,300 a month, plus another $470 or so for taxes and insurance, gives you a roughly $2,770 a month mortgage, which is quite a bit higher than rent. But fast forward 5 years, and here's what happens. You'll pay down about $22,600 in principal. Your home appreciates at a modest 4% rate per year, adding about like $97,500 in value. On top of that, then you have tax deductions on interest and property taxes, which add up to about another $34,000 or so. And when you add up all of those things, you're sitting on $210,000 in equity after 5 years if you're a homeowner. Meanwhile, a renter, they've spent 156 grand and they've got nothing to show for it except liquidity. Now, some people might push back and they say, if I rented, I'd invest my $90,000 down payment in the stock market instead. Fair point. And if they were able to make a 7% annual return on their money, that would grow that $90,000 over 5 years to about 126 grand, which is no small potatoes. But here's the catch. You're still out of pocket by about $156,000 in rent, and you have no equity. Now compare that to the 210 grand in home equity that buyers have built. And homeowners come out ahead by like $84,000 in cash terms, which is a 67% advantage over the renter-investor approach. So stack it all up clearly so we can compare. Renters are down 156 grand after 5 years. If there's a rent and invest guy, he might have 126 grand, but that doesn't cover his rent losses. Homeowners, on the other hand, are up 210 grand in equity. And that's the difference between watching your money walk out the door every month and owning an asset that's compounding in your favor. Over 5 years, buying just doesn't edge out renting. It absolutely obliterates it. So here's the bottom line. If you're planning to stay put for at least 5 years in your home, that's enough time to recover the friction costs of buying a property. Then buying isn't just about having a place to call your own. It's one of the most powerful wealth-building moves you can possibly make. Renting might buy you flexibility, but buying builds your future. And I think the latter is far more important.